So this is the final stage of audit where auditor have completed all his work, concluded on all items, and he has taken all the evidences, and he is now ready to do his communication part. Now communication can be of two categories. One is to the communication to the management, those charged with governance, and then communication to the shareholders, the ultimate users of the financial statements. Firstly, we are going to learn as per ACCA 700, which is communicating to the users of the financial statement by forming an opinion and reporting on the financial statements. So what is the auditor's biggest objective? It's very simple. Auditor's objective is to form an opinion. Now, whether the opinion will be modified or unmodified, whether he might, raise some concerns, all of those items are based upon his evidences he collects. So, if he is able to collect evidences and he has identified mistakes, then he will report it in certain category. If he is able to collect evidences and no mistakes were identified, then he will report it in a certain category. If he is unable to collect evidences, then he will report it in another category altogether. So the forming of opinion are divided into two parts: whether sufficient appropriate audit evidence has been obtained, whether uncorrected misstatements are material or not. Those are the two things that we need to discuss and take a decision upon. So he will form his opinion and communicate to the users of the financial statement, which is the shareholders, by giving an audit report. Now, the basic element of audit report have all these items in it. Basic element. So the audit report includes the following items, which are title, addressee, auditor's opinion, basis for opinion, going concern, emphasis matter paragraph, key audit matter paragraph, other matter paragraph, responsibilities for the financial statement, auditor's responsibilities, report on legal and regulatory requirements, name of the auditor, signature, auditor's address, and date of the audit report. So these are the elements that would include in an audit report. These are the paragraphs that the audit report should include. In this, what we have to study for this chapter are specifically calling out as our auditor's opinion, basis, and going concern, emphasis matter paragraph, key matter paragraph, and other matter paragraph. These are the things that we will look out for. So as you can see, the audit report firstly starts immediately with the title and then addressee, to whom we are addressing. So addressee will be to anybody who's seeing this report, or to the users of the financial statement, right? So address will be directly either to the users of the financial statement, which could be the shareholders or members, depending upon the nature of the company, and the auditor's opinion will be the next one. So addressee will be the person to whom we are addressing, who have appointed as the auditors, and in that after that we are immediately writing the opinion of the auditor. Opinion is where we will write whether it represents true and fair, or is there a modified opinion like qualified or disclaimer opinion or adverse opinion. Then we are explaining that. After that, we will explain our basis of opinion, like if you are qualifying, why we are qualifying, or if you are giving true and fair, why we are giving true and fair, on what basis we are giving true and fair. So those are the standards that we have in our place. So let's first understand these in detail, and then we will also going to be learning about what are the various paragraphs we have. For example, what is key audit matter paragraph, what is other matter paragraph, etc. We will also look at one audit report, and I will show you how all the items are placed exactly in an audit report. So let's learn about a standard unmodified report with an unmodified opinion. So the standard report laid down as by ACCA 700, 701, 720 looks exactly like this as an overview that is given to you. It starts, as I told you, with the title, independent auditor's report, and the addressee, to whom we are addressing it, to the shareholders of the company, or any other appropriate addressee as by whoever is appointed, as it could be partners or it could be members, etc. Then the first paragraph that we point out is the opinion itself. So it will mention like in the view of the auditors on so and so reporting period, the company being audited, it will give a true and fair opinion or presents fairly. They can use both languages either true and fair, or it present materially in all material aspects. So there's no condition that you have to use true and fair itself. You can also mention that it presents fairly. The second paragraph is about basis for opinion. Like, what is a basis? How have you concluded that it is a true and fair and opinion? So the basis will be based on our standards that we have used for auditing. What are the standards we have used for auditing? ISA, International Standards of Auditing, and IESBA. So in this we will write that the audit was conducted as per the ISA and IESBA standard, and the audit has followed IFRS standard, and the financial statement we did not identify anything which is to state out for a material misstatement. That will be the basis. So the next is what we are going to discuss to the shareholders is certain matters which we felt is significant for the audit. To give you an example is significant risk. Now when it comes to significant risk, we have learned that significant risk are those risks which will impact the auditor's work to a higher extent, because it will be very difficult for him to identify or to gather evidences for these kind of transactions, or this could affect the financial statements significantly. Are those significant risks? So when we are auditing such significant risky items, we would spend a lot of our time on those significant risky items, where we will be gathering evidences, discussing with the management to try to give a conclusion on the significant transactions, because we cannot just say, okay, this is one of the transaction, we will just do the evidence and collect the evidence and go away. No, we have to spend quality time, maintain professional skepticism, maybe gather additional information, or have multiple rounds of discussion with the management, etc. So if there are in an audit, there will be such situations where certain transactions are considered to be significant risk, or those transactions where we spent a lot of time auditing which affected our professional judgment and professional skepticism, we would include them in key audit matters. So as per ISA 701, key audit matters are the matters of most significance from the audit required for all listed entities. Key audit matters are mandatory for all the listed entities. If it is not a listed company, you don't have to have a separate paragraph for key audit matters. Key audit matters is from the perspective of an auditor. It's not from the perspective of a user. It's from the perspective of an auditor, that he spent quite a detailed amount of time to audit this particular transaction that he gathered, and to form an opinion on this, it took a quality amount of his time, are called as key audit matters. There is something also we learn very shortly is emphasis matter paragraph, where we are emphasizing things to the user. That is from the perspective of a user, like what user have to know. We might emphasize certain things and present it to him. To give you an example is a situation of a future cases. There are an existing case, a court case against the company, and as per us they have created provision, all those things is fine, but this case could actually develop to something severe in future, so we just want to emphasize that. That's an emphasis matter paragraph. Or other things, or items relating to certain transactions, if you want to emphasize it to the user, we would put it in emphasis matter paragraph. To give an example, frauds, even though it is not very heavily material fraud, but fraud did occur, so we might emphasize that in our paragraph and mention it to the shareholders, stating that there was a fraud that happened, etc. But key audit matters are those transactions which specifically consist of significant risk or fraud risk that was identified, which have been identified by the auditor. We will talk in the same way what we have documented, like what is the matter, why we considered it as part of our key audit matter, and how did we respond to it, what are the procedures we did. So that's how we're going to tackle the key audit matters. Then other information. Other information is where when we give an audit report, the audit report is part of an annual report of a company's financial statements. So when we give an audit report, the audit report along with the financial statements are part of an annual report. In annual report, financial statement is one report that goes to the shareholders or to anyone or to the regulators, etc. There will be other items in the annual report as well. Like to give an example, management's future plans, management's past performance, giving details about the management's performance during the current year, giving details about what are their plans of actions in the next year, giving details about chairman and chairman statement, board of directors statement, about CEO's message will be there. Then various committees that the board of directors have and how are they performing, corporate governance reports, environmental reports, all those things actually form part of the annual report. So annual report is a one bundle pack which contains each and every information about the company. Now, all those which are not financial statement are other information for the auditor, like chairman statement is another information, is not part of the financial statement. So as per the auditor's responsibility, if the other information which is part of the annual report are ready, auditor can read them and say whether they have anything to report on that part. Like, are they identifying any material inconsistency between the financial statements, between the data reported in financial statement versus the other information. If they have nothing to report, they just have to mention that there is nothing to report on other information. But if there are material inconsistencies, they can report it. They can reach out to the management and ask them to modify the other information or the financial statement as per where it is correct accordingly. But if there is no material inconsistencies, they can leave it. Then there is something in detail about the responsibilities of the management and those charged with governance, like who prepares the financial statement, including controls, who assess the company's ability to continue as a going concern. All those things are actually drafted down as the responsibilities of the management. They're also listed with the auditor's responsibilities. What do they do? Like, how are they? What is their summary of objectives? How did they obtain the reasonable assurance? What are their, what is their role to maintain professional skepticism and judgment in terms of the policies? How are they presenting this, etc. They also give some reports on legal and regulatory requirements as well, other legal and regulatory requirements. With respect to the auditor's report, will, how are they forming this legal, confirmation, etc. were also mentioned. Finally, the auditor will give his name and signature at the end of the report. So this is how a normal audit report with unmodified opinion and unmodified report will look like. Okay, this is how it will look like. Once we have formed this audit report, the auditor have the responsibility to do another two communications. One is communication to those charged with governance. In addition to reporting to the shareholders through audit report, they have to communicate the matters of the audit importance to those charged with governance, like significant risk or issues they felt that, okay, they spent quite a lot of time, issues they had to argue with the management, issues they felt that, the management are have something to hide about. All those things they have to communicate it. They also presented during the audit committee meeting. Auditors are present when the board of directors present the financial statements to the audit committee and to various other board of directors. The CFO would present it. The management will also present it, and auditors are also part of the meeting. All right. Items generally would be communicated would relate to auditor's responsibility as part of the audit, and as well as issues arising from the audit. There is also sometimes a report to management, includes as a report to management, where they would mention significant findings from the audit, such as the accounting policy, difficulties encountered during the audit, oversight of financial reporting purposes, etc. So after the audit is concluded, we expect as an auditor that, okay, we did not have to discuss so many things which had to go through multiple changes in the financial statements. We ensure that, okay, you know what, you give the financial statement, we collect evidences and we sign off. That's it. But it doesn't work that way. There will be situations where the accounting policies the company have chosen have some troubles, like there's some ambiguity around it. So it needs a detailed discussion. So we would include it as part of our significant findings, like this accounting policy has been chosen this way. It has been rectified for the time being, but it has to be corrected in future. What are the difficulties we arise during the audit? Like issues with your team members, issues with the internal controls team, issues with the evidences getting collected, issues with certain transactions which the auditors did not have any idea about, and even the management did not have any idea about, which had to be reversed, etc. Matters which are like, for example, are not uncorrected, like uncorrected misstatements, but they are not material. So they still want to discuss those which might be affecting significant issues. So they could be uncorrected because they are immaterial for the management, and it's lower than our materiality, so we might leave it. But uncorrected misstatements, we need to ensure that such things do not occur, because tomorrow if it becomes more than materiality, we might have to modify the opinion. Those things can also be discussed. Then oversight, like fraud issues, like are they identified any fraud items. Internal control deficiencies is one of the most important items we communicate to those charged with governance. We mentioned that we identified that there are certain issues with the internal controls where the financial reporting did not follow this process, etc. And for that there is also specific communication requirement for internal control deficiencies, which is ACCA 265, communicating deficiencies in internal control to those charged with governance and management. This standard deals with specific internal control issues identified to ensure that they are promptly for the right action to be taken. These issues communicated are identified during the course of the audit and necessary for the creation of the financial statement under review. Deficiencies are classified as significant if they warrant attention of those charged with governance. Findings are usually presented along with recommendation and a time scale. So internal control deficiencies are when we are performing the test of controls, those deficiencies where the controls failed, like we identified deficiencies in the control systems or processes. Second are for certain processes there are no controls at all. To give you an example, let's say there is a finance guy who transfers money, processes certain bank payments, and his bank payments are not reviewed by anyone. So that is a lack of control rather than deficiency of internal control. No, it's a lack of control. As a lack of control, we need to recommend, like, okay, this is the recommendation that you need to have a review process and it has to be approved by a senior person, etc. Similarly, if there could be deficiencies, let's say for example, maker checker itself, for certain processes, it has been approved by a senior manager, and we took 10 evidences to see if 10 of them have been approved. What if only 5 of them approved, 5 of them not approved? So 50% there is a deficiency. So we will report that as well, that every time it has to be approved and auto approved, etc. We would also say, okay, in a certain instances when we try to post an entry, it did go through without any request for approval. That could also be part of the communicating of the deficiencies when it comes to ACCA 265. So to ACCA 265 we specifically only focus on internal controls, and where there is a lack of control and the controls are there but the controls are failing, like the controls are failing. That also we try to communicate. So it's very important that the auditor communicates these two with the management. They are also called as management report and communication to those charged with governance. 2 reports goes. One is a management report with all the report required for the management, which we need to highlight to them, which we thought that had issues with the audit or any matters which we find it difficult, etc. And also any deficiency in relation to the internal control as well.